That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Surabhi Upadhyay in the studio. And as always, we've got Nigel D'Souza in the newsroom. Good afternoon, Surabhi. Good afternoon, Nigel. Steady, right, for markets and not bad. We woke up to negative global cues. The US markets were down 1.5%. The Hang Seng was down more than 2%. The SGX Nifty was suggesting a gap down opening. We had a gap down opening. The Nifty went down to levels of 17,600, but thereafter, look at the pullback which has played out in the markets from 12 p.m. onwards. And right now, the Nifty is almost back in the green, while the mid-cap index is up nearly 0.25%. From the day's low, we've managed to recover more than 100 points because the Nifty is now situated and positioned at 17,715. And we've also managed to climb above that 20-day moving average. The global backdrop in terms of Asia was fairly subdued, but Europe is not too weak. You've got a cut of about 0.25% on the CAC and the FTSE, so not too bad. And the Dow Futures is currently suggesting an up move higher by about 45 odd points. Banks are doing well, so it's led by IndusInd Bank with a 4% rally. We'll talk more about it, but even other names like an Axis Bank has started moving up. You've got strength coming in, and other financials like HDFC Life, Adani Group stocks, of course, are higher in trade. And on the losing side, IT is on the back foot with the index per se down close to about 1%. But the story is about India's resilience, the pullback, and the fact that after a 400-point rally on Friday and Monday, there was all the reason for you to, see some amount of profit booking considering the global weakness, but that's not played out.
I think phenomenal is the only word that comes to my mind, Reema. It's been absolutely breathtaking, the manner in which the markets fought back and kind of shrugged off a lot of this uncertainty. Though I don't want to be sort of the negative view seeker over here, but I think it's important to keep context in mind, because what's happened in the US rates market, whether you can really write that off in one day flat, digest it and move on, we don't know. At least I'd want to wait a couple of days to see how the bond market, the rates market in the US behaves, and then therefore the fallout in equities. By the way, just to get some context to this, Reema, the 2-year yield in the US is at 5%. The 10-year is just about the 4% handle. So the differential is 100 basis points. The last time the differential between the two, and we're talking about an inversion in the yield curve, the last time the differential was almost 100 basis points plus was 40 years back.
1981.
Yes, and that's when we all know what happened after that. Many a times these inversions have been an indicator of an upcoming recession. So we've heard the narrative long over. The question is whether this time it's any different. Well, that's a long debate. It will continue through the course of this show and many others. But for the time being, I think it's worth taking in mind, keeping in mind the fact that the recovery has been absolutely nothing short of breathtaking. So, Nigel, hands down, it really goes out to the Bulls the way they fought back today.
Well, happy Women's Day, ladies. Surabhi, earlier today I said it, right? Lady luck could shine upon the Bulls, right?
Yes, and you did.
It seems that's played out today, because who would have thought, 1 hour to go for today's trading action, and we're trading in the green. Wow, look at the Nifty Bank as well. Big recovery from the low point of the day. Though in Monday's trading session, we did come off the day's high. It seems that the Bulls were positioning for some kind of a disappointment on the holy holiday, the trading holiday that we had. And the Nifty came off close to 90 points. The Nifty Bank was down 300 points from the day's top. And so any kind of bad news, some part of that at least got factored in. Remember, volumes today are a little bit lower because parts of India are still, will be shut for Holi. And there are various parts, whether it's North India, sections of South as well, are celebrating Holi today. The options data, though, is encouraging. We've seen a good recovery from the day's low, and 17,600 put as well as the 17,650 put. Both of them are seeing a good amount of open interest build up. So that's telling you that maybe in the near term, the Bulls don't want to go back to around 200. The DMA. They want to take some bit of support at around the 17,600, which is from where we did bounce off in today's trading session. So the key levels to track, there is writing being seen at around the 17,600 put. So 17,580, that becomes a crucial level to hold out on. And on the upside, yes, we've seen a recovery, but I expect the bears to come in at fight at around the 17,770 odd level. And I say that because there is call writing being seen at around 17,700 calls. So these two levels, let's get both of them up for you on the screen. The support level as well as resistance, both of them crucial markers now in the near term. Back to you.
Okay, let's tell our viewers then what we've lined up on Closing Bell today in the next 1 hour. IndusInd Bank is gaining in trade as we learn from sources the RBI is likely to extend CEO Sumant Katpalia's term. We also learned from sources that Chola Mandalam Investment may be eyeing management control of Aptus Value Housing. Details on both those exclusives coming up on the show.
Axis Bank seals the deal to acquire Citi's consumer business in India for 11,600 crore rupees. Key excerpts from our conversation with MD CEO Amitabh Chaudhary coming up in just a bit.
Finally, we'll discuss stock portfolio bets with our alpha manager Shibani Sirkar Kurian of Kotak Mahindra AMC. All this and much more in the next 60 minutes.
All right, so let's kick it off with trading strategy.